in downtown.
The money kept coming in.
You kept saying construction costs were gradually rising. Obviously, you were collecting your installments, sales were taking place. Were you risk aversive or you were very bullish?
At a certain point, it was bullish.
Thank you and welcome to another episode of Milis Podcast. With me today is an old colleague, mentor, and I would like for you to guess for those real estate veterans and fiascos, which development we're going to be touching upon from a financial engineering aspect, who's worked on what was dubbed as the world's largest single phase development. Mohamed Kahtan, a graduate in BCom in accounting and SEMA from the UK. Thank you for joining us. If you could just please introduce yourself briefly before we deep dive into multiple aspects and topics.
Thank you very much. My name is Mohamed Kahtan, as you've mentioned, and I'm a qualified chartered management accountant, CIMA as you called it, in UK. I've started working in real estate since 1996. In UK, I was working in a housing association. Housing association is where you provide social housing to people. You get grant from the councils, and then you build houses, and you provide to the people who can't afford to buy houses. And it wasn't on a big scale. It was a very, very small scale, but housing here, housing there, and then that's how I started my journey.
That's boring. Let's fast track into leaving social housing and moving to Dubai.
Then from there, I moved to Dubai. I started working in Al Ghurair. Al Ghurair Group is one of the major groups in the UAE, especially in Dubai. Al Ghurair is a diversified company. It's got a lot of manufacturing units, a lot of real estate. And I was looking after all these organizations. My first pushed in when I was in Al Ghurair, we had to open 2 factories. One is, I did a feasibility study for these 2 factories, manufacturing units. Then after that, I went straight to the expansion of Barjuman. Barjuman is one of the major shopping malls. So I got involved in doing the financials and modeling for the Barjuman Center expansion, and then maybe to raise finance from there. From there, then I moved to...
Then you and I met around 2002.
Yes.
And you moved to what was one of 3 major real estate developers and players,
That's
right?
Correct. That's correct, yeah.
And that shift to you has left a lot in terms of learning and experiences. And I believe back then it was, the golden era for those that embarked on real estate, because there was only a few real estate developments under freehold.
So the first, I think JBR was the second one. The first project was Marina.
Yeah, those original 6 towers.
Yeah, there were 4 towers.
4?
4 towers.
I counted
4
6.
towers. No. There were 4 towers to begin with. At that time, 2002. And then when we started, basically we didn't know, when we were doing the studies, we didn't even know. I mean, okay, the company know, but some of us, the staff, we didn't know where this project going to be. It was like a bit surprise. But we did the study, the financial modeling for all the towers and everything. And at that point, we didn't have even a master plan. It was like we're going to have how many towers and this 1.7 kilometers stretch of these things. And we did the studies and everything. And it was like, it's unbelievable. I remember when I joined Estismar Realty as a company which developed the JBR.
Which today became Dubai Properties Group.
Yeah. Then after that, it became Dubai Property. I remember the first few days I was working on the model. The model was there first to begin, which was presented to His Highness. And then we were changing the model a little bit. It was like okay, there was a meeting and then they said, okay, now we are going on the 5th gear. Sheikh wants to announce the project in 5 days. We were not even ready into anything. So we pushed ourselves. Managed to provide...
Sleepless nights?
So, of course, it was like I don't know, days of you don't know what you're doing. But it's crazy. But finally, we did the model and everything, and then the project was announced.
Yeah, back then the project was announced again, like the largest single phase development
It was
in the world.
Yes,
A 6 billion dirham project,
6 billion,
a 1.5 kilometer
1.7 kilometer,
yeah,
beachfront.
1.7 kilometer
Yes.
stretch,
Mm.
6,500 apartments, and
Yes.
was anticipated to house like close to 35,000 individuals,
Mm,
right?
mm, mm.
Now, out of those 40, 36 were residential towers
4 were hotels.
and 4 were hotels.
Yes.
Given the scale of the project itself, what was the strategy in terms of a residential tower release? Or was it just sell out, move on to the next? You started with the side closest to the Ritz-Carlton or the side closer to the Sheraton Hotel?
Or sort of, the idea was like sort of to have a towers. First, it was like sort of, shall we do sort of a sharing apartment, like sort of this time sharing? There was a lot of discussion on that.
Yeah.
Some towers to be time sharing or this, and then the final decision was like sort of build, sell it. And then you've got a stretch of commercial retail.
Yeah.
We said, okay, you retain the retail, which we, as a company, we own the retail, but we sell all the towers, all the apartments. Hotel also, for hotel to be sold, because we were not in a business of hotel and everything. The question of building it, that was a big challenge. It's a 40 towers. You're building from one end to another end.
Yeah.
At that point in Dubai, there was no a real contractors who could take the project.
Yeah, the magnitude
It's
was
huge. And
massive.
you can't, there were only few, I think, who has done high towers. But nobody was confident enough to say, I'm going to take the project. So there was a lot of discussion going on to get the contractors in. Finally, the breakthrough came. Arab Tech accepted to take, because the issue was not how it helped. They've divided the whole project into sectors.
Correct.
6 sectors, if you remember.
Yes.
So Arab Tech has accepted to take 2 sectors. And that was a breakthrough.
Yeah, back then Arab Tech was one of the largest.
Yes,
Yeah.
it was, yeah. When Arab Tech signed, so then the other companies got
more confidence.
Yeah, so they came in and they take sector by sector. Arab Tech took 2 sectors. The other one, they take 1 sector each.
Yeah.
I mean, so about 4. Finally, that was the start. The idea first was like sort of to release the project within 2 years. It's a huge
That was what year?
That was
2002, correct?
2002, yes.
Yeah.
Because we sold the apartment, or the advertisement was like, you're going to get your apartment in 2 years.
2005.
2005.
Yeah.
It didn't happen. I think we started building in 2004 or something.
But even, I mean, back then in 2002, we were looking at an average value per square foot of 250 to a unit.
Yeah.
The studios started at 299,000, overlooking, the sea.
View, yeah.
1 beds were 449, 3 beds were 699.
99, yep. And
4 was 949.
949.
And these were that was the residential mix at the time.
That's correct.
But as the project gained momentum and the city started to gain more fame, right, from foreign investors acquiring freehold properties, we then later on introduced through management
increasing
lofts and the penthouses. But we'll get to the price increase.
Yeah, I want to talk about the
was
price.
it challenging for you to be selling at those prices when Dubai was going through this construction and real estate boom?
You see, I'll go back to that. The whole project was not supposed to be profit making. It was supposed to make a little profit, because when we do the studies, you recall, like sort of, we didn't count the cost of land. It was like sort of, don't count. Land is free. Just do the other cost. And that's why the price
like those would be the hard costs or the soft costs?
That's hard cost.
Yeah.
The question is, I said, that's why you find the
can you
prices.
Just explain like what hard costs usually cover?
Hard cost, sort of the construction cost, all the roads, infrastructure cost, consultant cost. These are very hard cost, running costs. The pricing at that time, they were very, very low. And if you remember, I think you remember you on the sale, it was very difficult to sell also. People were not that confident yet. People started coming to buy in very, very slowly.
I think I brought confidence to people to buy. I remember I'd walk in the morning, run to the fax machine to see if that reservation form is signed. Remember the fax machine?
Yeah. The reservation, yes.
And that's how we transacted.
Mm,
It was, the scanners weren't really still active and in use.
You see, like sort of, if you remember, somebody comes, sign reservation form, pay 65,000 or something, 25,000 as a booking fee. They don't know where is the project. See, that's what has happened. They don't know which apartment they're doing it. They're just signing it. The price were good, but still, at time we were selling it very, very slowly.
Yeah,
there were some people who bought towers.
I mean, just the fact that you're saying that people were signing reservation forms at a time when infrastructure was not set up.
Nothing, yes.
At a time where there was no real benchmark to pricing in real estate, is just reinforces the strength and the positioning Dubai had before, the development, and while it was, let's call it a frontier market.
Yeah. You see, at that time, especially with our project, people had a confidence of one thing, the backup. They know this is a project backed up by the government. So that's why people were investing.
Yeah.
And we used to get people from Abu Dhabi. Yeah. I know somebody from Abu Dhabi sort of bought it 100 apartment in one go. But the sale was not going very, very quick. Until at the time when they started seeing the developments, people came in and started buying more. Then at that time, the price was going up. I don't know if you remember this.
No, I remember the first price increase. It disappointed me because it made it harder to sell, right?
Yeah, but
and there was that week of quietness where people were doubtful.
Yeah,
like people were buying studios at 449. All of a sudden, it's at, for example, 599, and then we moved to 700.
I'll tell you why the price changes. There was a guy who was working with us, and he said he called two salespeople. He said, "Listen, guys, I'm giving you 1 million. Go to Jumeirah, find me an apartment, 2-3 bedroom, sea facing with 1 million. They couldn't. So at that time, and then I said, listen, we're selling 4-bedroom apartment, facing sea for 1 million, 949. They no, this is not normal. We have to increase the price. That's where the price started going up. But still, people were coming slowly, until when they started seeing the development going on. I think the development started, a delay.
Yeah.
And people were looking. I remember, I think I told you this. There was a guy, they bought a hotel from Abu Dhabi guys.
Yeah.
And this guy, he used to come after every 2 weeks, he will go to the site and see nothing, just body. Then he'll come to the office, he see models. And then you remember the models we have. When the small, very small model, then the model was increased.
It wasn't even detailed. It was just pure white.
Yeah, exactly. That's the first one. And then we came to the end, we got a huge model with detail of the apartments and the towers and everything. And this guy, I remember, he called me, he said, listen, Kahtan, I go to the site, I don't see anything. I come here, I see model is growing. There's nothing
the scale,
there.
We kept increasing the scale, and new models kept coming in. And
I said, listen, just don't worry. You will see a development there. But when these people started seeing the development, then they realized, oh, this is true and this is happening. You remember, some big architects were asking, are you going to do this in Dubai?
Yeah.
And they'll say, yes. Say, you guys are crazy. You can't do it in Dubai. Even when you go in Europe, they used to say that you can't do this in Dubai. And there you go now, where it is. Then at that point, when the prices were going up, the development is there, people came to buy. And then what's happened? Secondary markets that are coming in.
Correct.
Yes.
But that started being a competition for like us that were in sales.
Selling, yes.
Right? Because some people bought at the lower price point. We were selling at a higher price point. And then also, I believe, given the project was moving gradually with the construction,
Mm.
a new breed of residences were introduced. So
Yeah.
you had the penthouses,
Uh-huh.
and then we tiled up the roofs to give it, that certain look and feel. You had the lofts,
Yeah.
and I think it was maybe the second development to introduce lofts, if it wasn't the first in the city. It was sold like shell and core, and we had the terraces.
Yeah.
So like, why did this come into effect at a later stage? Why was it not thought through before? Like, was there an opportunity to monetize more?
No, but to begin with, it wasn't. JBR was not supposed to be like sort of a high class standard, high class district for the. It was a normal project for everybody to come and live over there, and that's why the price were low and everything. The idea of JBR was to stimulate the economy. We've got 6,000 people on that side. You've got a hotel, you've got a sea, you've got everything. So people will come in. So the economy will start stimulating.
Yeah.
In 2002, there was Dubai was not like this today.
Yeah.
But that's how it started. Remember, after completing the JBR, I mean, you couldn't walk there. You couldn't drive. People were flooded over there. The hotels, a lot of tourists and everything. That's where everything started.
True.
Then, after going on, when the construction was going on, that's coming. What came in is a change request, they call it. Or said, okay, now we want to put penthouses in every apartment. It wasn't in a plan.
Yeah.
The first plan, there was no penthouses.
Yeah, true.
So that's when we put penthouses in all the apartments, all the towers. And then we came with the tower.
Just on the penthouses.
Sorry?
I remember I was the first to sell
the penthouse.
The first penthouse, it was just 3.5 million.
Then it went up to what? I don't know, 10 million, I think.
Yeah.
People are buying penthouses.
Now it's beyond that.
Yeah. Then you started this loft apartment. It's completely different concept.
Yeah. I mean,
then
in the region, like duplex. Lofts did not even exist.
It was like people were asking, what's a loft apartment? Yeah. I remember this. And then it started like sort of building up JBR. And the cost was going up. Every cost was going up.
Correct. So I mean, in terms of like costs going up, you had around 4 to 5 contractors on site.
Yes.
A lot was happening. What do you think were the fundamental financial pillars, for such a mega development that helped see this project through, despite the delay? I mean, a lot of developments get delayed.
Yeah. You see
at the end, JBR was a win for anybody who bought.
Exactly. Yeah, exactly. You see, the issue I don't know it's not the issue, but what's happened, we collected a deposit. And then if you remember, we called people to come and select the house and pay the first 20. Our payment term was very, very aggressive, to be honest. You pay a deposit, you come and choose the house, you pay the first 25%, and after every 6 months, you pay 25% of the cost. That is the 2 years. 25. And the first year, you pay 50, the next year, you pay 50. So by the first year, we've already collected 50% of the selling.
So you were talking about like 2 billion?
It's about that, yes.
Back then, 2 billion in 2002 was a substantial amount.
It's a huge amount. And the question is like sort of by then, we just started building. So we had enough cash with us. And that's why, if you remember, at that point, we came out and said, listen, this project is going to go self-financing.
Yeah.
We're not going to take a single dirham from bank. Yes, because of that. A year and a half, we've already collected 75% of that. And that's how we managed to finance the project. The big issue was like, somebody comes and fill the form, pay 25 the first deposit. You get the form, X and Y, Z, he paid this amount of money. How we recorded that?
Yeah.
It's we didn't have any system. No system at all.
Excel sheets.
We did that on Excel
I used to see you when I'd walk into the office working on these Excel sheets.
It's just
And you always gave me this funny look. Like, why is this little kid in my office who's doing sales?
I don't know.
But it was good.
No,
know?
but you see, the Excel
that
sheet-
attitude had resonated very well with me.
I don't know. It could be the pressure of the Excel sheet. The question, you see, you are doing all this.
And you
video.
gents were a small team for a project of that
At
scale.
that point, yeah,
you
we were
were
about
like
a 3 or 4, yeah.
Yeah.
Then, you see, Excel sheet can collapse anytime.
Yeah.
But okay, we
But
use have
Mohamed
we
Kahtan
had a
will not
contingency,
collapse.
like sort of
Mohamed Kahtan will not collapse. An Excel sheet
No.
will, but you will not.
It's the question is, we did that and we managed to control. You see, the Excel sheet, you have got this something called pivot table. With that, we could give you any report you want. Nationality, how many apartment has been booked, or whatever report you want is there. And that's why we used to produce on a weekly basis. We managed to do
True,
that.
but that was all human data entry, right?
Yeah, it was like that.
Yeah.
But you see, you've got
And
your
back then,
forms.
there was no requirement to register
No,
with any authority.
No, no.
Right?
Yeah,
it was all,
that's- you
it
see,
was all
this-
in-house.
Yeah.
Even when you spoke earlier about the secondary market kicking in, it was all
There was
routed
nothing.
through the developer.
There's
Like whatever
nothing.
developer existed pre-2008 was routing everything in-house.
Yes, everything was going there.
You set your own fees, and that was an additional income stream which wasn't factored in.
Yeah. You see, there are two extra factors than any income. But I'll go on this. We collected the first 25%. And then you tell people come collect and give your check and everything. So you know, XYZ came in here, he paid this amount, and he selected this apartment. At that point, if you remember, we had this I'm lucky.
Of course.
Yeah, that came after.
That was the CRM.
Yeah?
I'm lucky was the CRM.
Yes, yeah.
Yeah, that's where we
It
did-
it wasn't something
A
very,
primitive
yeah, it
CRM.
was very, very basic.
But for those days, it was good.
It
did
was,
the job.
it
Yeah.
worked.
Yeah.
It did. I mean, sort of, we could put an apartment, we could put a name,
Yeah.
we could put a money. Somebody else paid this much money, has got another 3
And
payments
it
to
gave
pay.
you more control, right? To block
Yeah,
inventory,
exactly.
to issue receipts.
At that point, but to begin with, they didn't have so many features
Yeah.
like those receipt and this. So basically, we develop. I'm lucky. So we want this, we want this, we want this. So
Yeah.
we keep on wanting things, and they're developing. They develop, and at the end, I think they provided the software to other developers.
Correct. Yeah.
But then you tell people your next payment is this day. You have to send money. So you get people from outside, not in Dubai. That means sort of people outside. Oh, people in Dubai. They give you 4 checks. Or people from outside, they do a transfer. They send a transfer. You don't know. They don't write, this is so-and-so from this apartment. Apartment number so-and-so.
Yeah.
And that's, we used to tell bank.
Yeah.
Because we had the power to ask the bank, like City, in our statement, we need this.
Yeah.
We need a apartment
reference.
that. Yeah.
Right.
But people don't provide references,
Yeah.
some of them. So you get the money come in, you don't know from which apartment. So you keep it on a suspense. And that suspense grew up to, I don't
Like,
know
what
how
do you
many.
mean you keep it on a suspense?
We don't know. We can't
Okay.
allocate to any apartment.
Mm.
So it is on a suspense account. The money is there. But we cannot say X come and he paid this much money. That's the problem would have come at the end. Sometimes people will send a letter, listen, you haven't paid your money. So people, no, I've paid. Say, okay, prove. People, they'll send
The Swift.
yeah, that's their money, Swift and
Remittance.
this, yeah.
Yeah.
Then we can allocate. Sometimes we couldn't. And it went up to the end. Some of the money we couldn't allocate. And you get somebody comes in and said, listen, I've already paid. You say, no, you haven't. I'll give you a story. We had
See, you're historic.
No.
A lot of stories to narrate.
no, this is a good one. We had 2 checks. Somebody paid, they paid the check, post dated. 2 checks from Citibank. Check number 3, both of them. Citibank, check number 3, same amount. We deposited the checks. One of the check bounced.
Mhm.
One of the check went through. So we didn't know which bounced, which went through. Check number 3, both of them, Citibank, both of them, but one bank. So we gave credit to somebody, and the other guy, we said, your check bounced. It went up to the end. The guy came to collect the apartment. He said, you can't. Your check bounced. And the guy was crazy. My check did not bounce. We said, here, check number 3, Citibank. And he said, no, my check went through. And this. I said, okay, proof. Give us a statement from the bank and everything. And he managed to do that. Then he brought the statement. After that, we found out, yes, check number 3, it went. So we had to go back and see what's happening.
Yeah.
Then we found out, oh, there were 2 checks. So basically, the guy, we gave him credit. So we have to say, no, man, you need to come and pay the check. We got it. We got the money. But it was so difficult.
Of course. I mean, between manual and
Yeah.
a lot of hard copy
Yes, exactly.
documents, things were not systemized. It's interesting you said that the project at the end was self-funded. So there was no equity, there's no debt.
There's no debt. There was
It
no
was
debt.
all based on sales proceeds.
Yes.
And that 25% down payment was intentionally planned out
You see,
for that purpose, or it just came all as a
It just came out,
coincidence?
yeah. It was a coincidence because what we planned is say 25%, and then after 6 months, 25%. That's you finish your 1 year, and then 25% again you pay on the. Assuming that we're going to start project at this point. So if you start at this point after 1 year, you know the construction, the way it goes, the construction payment, the moment you sign an agreement, you pay 10% of the contract. And then the cost goes slowly, and then it climbs. And then it goes down toward the end. So when you receive the second payment, by the time it climbs, you probably wouldn't have much money. Then you might need to go to the bank to get the money. But we managed to get the money up to the third payment. 75% we've already collected. And our construction was very, very low. That's why we managed to count that as sort of a self-financing project, not a single dirham.
And then, I mean, in between, while JBR was being sold, another development, another district surfaced, which is Business Bay, and that was a 64 million square foot mixed use commercial, residential, hospitality, where a mimic of JBR, but with a different kind of facade was there. Executive Towers. So the scale of, you in finance, all of a sudden, has grown. There was land being introduced. There was another villa community being introduced.
Yes. We had a...
So with the growth, what challenges did you have from, finance, accounting, the team?
I mean, we were working there. Then we started building the team.
Yeah.
When the project was going in Dubai versus JBR, we started building up the team. We grew up in our team. We managed to sort of divide our responsibility within the team. I mean, that's the one thing I wouldn't say, because of me or this or that, is I had a fantastic team. To be honest, very, very good team. Yeah. Everybody knew what they were doing. It was like sort of a clock machine. Everybody knew what they're doing, and there was no pressure. We used to have to provide a report, the parent company, on a monthly basis on the certain date. And believe me, we never got late.
And there was a very nice culture and enthusiasm amongst all the different departments.
There was no, sort of on our department, there was no pressure on anybody. The only thing is like on the 20-something, on 29th, all the reports should be ready. That's all. You work up to 2 o'clock in the afternoon, you go home. That's not my problem. My problem is I want the reports on the date, on the time. So you don't pressurize people, but people were ready to work for you as long as you give them opportunity and you trust them. Yeah. That's what it was like. And I had a good team, very, very nice team.
So Mohamed, you kept saying construction costs were gradually rising. Obviously, you were collecting your installments. Sales were taking place. Were you risk aversive, or you were very bullish in terms of like the spend, the changes?
I think it's at a certain point it was bullish,
Yeah.
and while the
It was
JBR
very
was going
bullish.
on,
Yeah.
you see, I would say we were lucky to have
Blessed.
yeah, okay, let's say blessed to have a business bay.
Yeah.
You see, what you see here, it was empty, literally. And
So was the other side.
sorry,
So was the other side.
yeah, but here, it like sort of the good thing. What's happened to us as a Dubai property then is we decided, okay, we're gonna keep part of land, and the whole land was given to us for sale. So we keep some for the executive tower, and we sold the land, and the money kept coming in. So basically, liquidity was not an issue at all.
Yeah.
Liquidity was not an issue.
But again, that's the beauty of Dubai, because people
Yeah,
had the confidence and belief
yeah,
in the vision that was already kind of mapped out, but
Mm.
not touched.
Mm.
And if you look at it 20 years later,
it's
everything has, like changed. The road network, the connectivity, the public transportation, the buildings in Business Bay, in downtown, across the city, and even towards the outskirts.
Yeah, I mean,
And to have been part of this is remarkable.
Business Bay, there were so many challenges with the development.
Such as, from a finance standpoint.
From finance point, from finance, we didn't have any problem, to be honest. That's what I'm telling you. We were a cash cow. Yeah. Cash was not an issue at all. Not a problem at all. So if you look at that, the only thing about finance department problem is to maintain proper accounts, to be able to satisfy the contractors, the bankers, and all these are the people who bought apartments. So people who bought the land in here. But we didn't have any issue with the finance. It's just how to manage. At one point, as you said, we started with 4 people.
Yeah.
I remember we ended up with about more than 50 people in our finance department with the different projects here, Business Bay, the villas, Turuk, Gurub. But then the developments were coming in.
Yeah.
I think it was the confidence.
Yeah, and I think these projects, Shuru and Ghurub, were more of the income-generating assets.
That's what it was. There was a point of talking we're gonna sell this or what, and then we said no, forget it. Let's not sell because we need some income for ourselves. Okay, we get some income here, but we need some income for the company, and that's why it's called. Let's rent these units, Turuk and Ghurub. The other one keep on selling the villas. The villa is a huge project. How much it started? the villa was started about I don't know. People are going to see 3 million, something like
Correct,
that.
Yeah, there were five Spanish themed types.
Yes, exactly. And then it went up how much? Up to 10 million, something more than that.
And now it's gone even beyond that.
Exactly.
Because people keep upgrading, the interior, and the communities come together
it's
nicely.
Exactly. It's a community.
Even the road network has changed a lot.
Remember here, the roads.
Of course.
You say
I think Sheikh Zayed was a 3-lane.
Internal
Road
here
was a 3-lane highway.
Yeah. Internal here at the Business Bay, the executive tower. No, at the bottom there with the retail, there was a supermarket there.
Yeah.
People started moving in. There was no supermarket. The road to come in was not very good. The supermarket people, we pushed them, say, listen, you have to open. They say, how can I open here? There's no road to come in to bring things.
The goods. The products.
Yeah. So basically, we have to push them, and then we have to make a small way for them to come in and give them 1 year free rent so that they can open the supermarket. So that people at least can.
Yeah, but that was what was the financial implication of 1 year free rent? On the grand scale of things, insignificant.
It's nothing, but you want people to come and move in. And
but that supermarket helped give people more confidence to rent, to move.
And that time, we really needed cash.
Yeah.
At 2008, after financial collapse. So that is the time we were handing
Omit
over.
financial collapse. There was no financial collapse.
It's a world financial. All right. We needed money. People were moving. They have to come and collect their apartment. So you come there, you want to pay for the last payment, collect your apartment. There's no supermarket, there's no shopping, there's no road, there's no this. You sort of delay. So
Yeah.
we managed to get people to move in. Because of that, supermarket is a huge thing.
Correct.
And then we managed to get the small clinics, this and that, so all these organizations.
Yeah, and I think even, I mean, in terms of like the residential mix over a period of time, be it JBR, Executive Towers, has changed and evolved a lot, right?
Yes.
Mohammed, you mentioned that the project was split into sectors.
Yeah.
And that was to get enough contractors that can execute the project.
That was
If
the
we
breakthrough.
fast forward from 2002 until the handover phase, what do you think were the challenges, from a financial aspect? Was it collections? Did this actually help you in recognizing revenue, which boosted, your books to work on other developments? Your learnings from that experience, because again, it was 6,500 apartments.
See, the handover was another challenge. Remember from the beginning what we said, like sort of, this is the thing I didn't mention, maybe I should have mentioned it at the time. What we said, first come, first serve. Remember this. If you come and make your payment today, and somebody come and make a payment tomorrow, so you came first, you have an option. I mean, you'll be called first to select apartment. So people came and select apartment and everything. So now we're coming to the time of a handover. If you fast forward then, we've got two issues here. The issue like sort of, now you're going to start calling people based on what's the completion. Good people come, see your apartment, and then make the final payment. Because at that time, then we are collecting the final payment, the first 25% at the handover. That's according to the agreement. And I'll come back. What we used to do in the agreement, we had that in the agreement. If you are delay payment, we're charging you 100 dirham a day.
Man, that's nothing in comparison to today.
Yeah,
People are charging a percentage on the outstanding amount.
We had
plus a fixed fee.
Yeah, it was, but we had a lot of challenges on that because we are delaying.
Yeah,
the project delayed, but if you delay, you have to pay.
But the purchase agreement was sided towards the developer, right? There was no penalization for a delay. There was just a notification that.
Yeah, we had something to say like, we will inform you when it's going to be. That's another challenge we had on that. You get people who come. I know I had this guy from the UK who seriously, he came there. He was with a sales guy, I don't know whom. And this guy was like sort of very adamant. I want agreement to be changed. This is this and that and that. He was going on and on and on. I don't know. The guy came and called me. And if you remember that time, like sort of, I'm not in finance only. You are a lawyer. You are a finance. You are a sales manager, everything. We had a few people. And the guy called me, said, listen, we've got a guy here. He's making these issues. I said, okay, let's go and see him. And I saw this guy, we were talking and this and that. And he said, listen, I don't know if he said, we don't do this in UK. Agreement like this, we can't do because of this and this. I look at him, I said, yes, you don't do it in UK, but you are in Dubai. And this is how we are doing it in Dubai. You're going to follow the agreement or you cancel the apartment. He said, I told him, listen, I've got an issue here. I've got 6,000 agreement. Everybody wants this to be removed, that one to remove, and to be removed, enter this, and put this, take out this. How I'm going to control this agreement? So I'm going to have different 6,000 agreements. So you either take this as it is, or then, but the question of changing, forget it. They accepted that. They can't do anything at the end. And as you've said, sort of it's sided to a developer. Then what's happened? This is the 100 dirham people fighting and this and that. We used to give discount on that. The secondary market, when it started, I mentioned that when the secondary market started, we had issues. Because it's not the issue like sort of we said, oh, we're going to get some revenue here because people start changing now and people are making money. So we charge 2%.
Yeah.
Remember that?
Yeah, of course.
We used to charge 2% of the value. And then,
Of the SBA value,
yes,
not the
the
resale
SPA
value.
value, yeah. And then we
I mean,
used to
even
make
that
money.
has changed today, right? Like if someone tries to undervalue the sale price of a unit, I believe the authority looks at a valuation and a mechanism. So it's a charge based on the current
The current,
market price
Yes.
to avoid outsmarting the system, right? In place.
You see, that's at that point when we were working with the JBR on this, there was no RERA.
Yeah.
It's like sort of RERA came to set up everything properly. You see, the escrow account. There was no escrow account. We collect money based on that. Nowadays, you can't. You collect money, you put in an escrow account, use that money for the project.
Yeah.
So things have developed a lot in Dubai. It moved very, very nicely. Now you've got millions of developers. I don't know how many developers. At the time, we had only 2 or 3 developers.
Yeah.
Now we've got a lot of developers.
Right now, I mean, as of last week, they've crossed 2,000 real estate development companies.
Yeah. So, but now there's a system. They have to follow that system.
Correct.
Before then, it wasn't. Okay, that development.
It was best practice.
Yeah.
Best practice.
Yeah, it's that's one good thing about Dubai introduction of RERA. Seriously, I mean, it gives people confidence. I don't know. You can't do anything. You as a developer now, you can't do things the way you want. You have to follow the rules. And that's a very, very good thing with the confidence to outside people. Because people used to think, Dubai, they don't do this, they don't do, but now there are rules. Even financial has been set up. Why all these development companies have come up? Now go back to the handover. So you call people to come and hand over, collect their apartment. People come, and as I told you, we've got a suspense account. I don't know, it was about 2 million dirham. We didn't know who paid this money. So you call somebody, come and collect your apartment, but you need to pay 50% of that amount plus the 100 dirham delay charges, late payment fees and everything. And somebody will come and say, listen, and people from outside I had to get. I said, listen, why you are charging me late payment fee? I've paid my money. No, you haven't. So we go into this and they prove and this, and they come and they prove. Then we come to take out this suspense account. It kept on reducing. And everybody will come. Finally, we managed to reduce everything to 0 or to very minimum amount. But it was challenging then. We had a special team for handover. Basically, you call people in, come, go and see the apartment, happy with that. Whether happy or not, they're all happy. Then they come and sign the final payment, pay the payment. They pay the payment for the visa because,
Wasn't it insane? I mean, someone's picked up a 1-bed at 449,000, bought it at 250 dirhams, 300 dirhams to the square foot.
Right, yeah.
By handover, prices crossed 3,000.
Yeah.
And that is up until, like the 2008 situation.
It's gone up. It's unbelievable.
And even with the drop that happened in 2008, it was around 800, 900 dirhams. So people still got
you still make
high ROI on rentals, on resales.
The people who wanted to resell, they made a lot of money.
Yeah.
And the rentals in that area is unbelievable, isn't it? So you have invested how much? 400? You are earning more than 100,000 a month. It's a very good investment.
How many did you buy?
Me. I didn't buy any.
Mohammed,
I don't know. I'm regretting or not regretting now, but I didn't buy.
No regrets.
No regrets, seriously. I don't know. I think I've been working inside there. Ethically, I didn't feel like buying. Probably it wouldn't have been wrong, but I could buy but not sell.
Yeah.
Because I'm working. I know the mechanism. I know that, next month the price going to increase. But then let's say, next month's going to increase. The price is this. I can sell it now. Then it wouldn't have been proper.
Good old man.
Yeah, it's not. You look at the ethical of the thing. It's like it's not only making money, seriously.
Yeah. Ahmed, thank you very much for joining us today.
Oh, thanks a
It
lot for
was
giving me
really
opportunity.
great to catch up, remember some old times.
Oh,
Thank you for watching the whole episode of Melis Podcast. A lot more guests that are contributors to the real estate field will be hosted over the next couple of weeks. We'd like for you to please like, comment, and subscribe. Thank you.